Hi everyone, and welcome to this week's TRM's Protection Podcast. I'm your host for today's session with Stuart McLeod from AIG. And today's podcast is all around dispelling the myths of protection not paying out. So as you all know, Consumer Duty is fast approaching towards the end of July. And a big area that ourselves at the network are looking into is, are we offering our clients a full service? And with that is the advice around protection. So I'm bringing Stuart into this, who is a protection specialist from AIG. So thanks for joining us today, Stuart. And what I really want to go through is probably a 10 to 15 minute session, which hopefully you will find very insightful, around the myths of protection not paying out, some inside information from Stuart, and things we can all take away from things which hopefully give you the confidence to start offering this service to your clients. So Stuart, if I can just introduce you now, please.
Morning, everyone. Hi, my name's Stuart McLeod. I'm one of the protection specialist team here at AIG and the national account manager that looks after the Right Mortgage Network. So great to be joining you guys, and thanks for having me along to discuss this session with you.
Perfect. Cheers, Stuart. So the reason we've titled this topic around dispelling the myths of protection not paying out is because statistically, when we've been at the network and chatting to our advisors throughout the network, that could be a common theme actually that's been coming up. So why not talk to somebody from one of the leading providers around from their stance really? So the first question, Stuart, I'm going to open up is, do customers or consumers think that insurance companies actually won't pay out on claims?
Thanks, Sam. Yeah, well, I guess the reality is, and you've touched on it there, talking around about consumer duty, and what we want to be doing as part of that is avoiding foreseeable harm for customers. And ultimately, one of the main tenets of consumer duty is pursuing their financial objectives. But there was a survey carried out during COVID, actually, during the pandemic, where the stats were kind of pretty telling, I suppose, from that point of view. It was carried out by Ernst & Young, and they surveyed kind of over 1,000 customers, and almost half of those, so 46% of those customers surveyed, thought that providers will try and find loopholes to avoid paying out on claims. So that is obviously represented. It's a customer feeling, you know what I mean? They think that that's the truth, but as providers, we've got a very different story when we talk about that. What we want to be doing is making sure that they do, kind of advisors have got the tools to dispel that myth, and not have that. Historically, you know, if you go back to the 1980s when it was all about kind of form filling and paper forms and ticking boxes and such, like that might have been the case, that a provider would have looked to not pay out if a box wasn't ticked properly. But now the market is very, very different, and what we want to be doing is making sure that customers do get the payout when they've got cover in place and they've been paying the premium. Even from AIG's perspective, you know what I mean, when we look at it in our claim stats, but our claim stats are mirrored pretty much across the industry. But you know, we paid out in 2021, we paid out 98% of our life insurance claims. So
which is a 2%. Fantastic number. Yeah.
So it is. And I mean, that's mirrored as well in our critical illness claims for 98 as well. So 98% of claims. And that's what customers need to understand, is that providers are looking to pay out. They are looking to do the right thing for them when they have cover in place, and not that 2% aren't getting paid out. There are reasons behind that, I guess.
No, exactly. And I think it's really interesting, especially from advisors' point of view, to actually listen to the provider and what their point of view of this is. And you know, should we as advisors be more confident when we're talking to our clients around, you know, this is what the protection will cover you for, and these are the illnesses it will cover, and so on. But actually, statistically, tell them that 98% of claims are paid out, and really give them the confidence that that's the case. Which takes me quite nicely onto the second question. I think when we're talking about claims not being paid, Stuart, from your point, what claims aren't paid, and why aren't they paid really?
Yeah, so I mean, I know we touched on it there, only 2% of claims not getting paid out, but the main reason that claims are not paid out is misrepresentation. So I guess the point and the strength of that from an advisor's point of view is making sure that, one, customers kind of are honest with them when they're going through and completing an application form, but they understand that if they don't, be honest, then there is a chance that their claim's not going to get paid out. So when we look at that, is say for our claim stats, 96% of the 2% essentially were not paid out due to misrepresentation. And that's, I mean, there's different things within that. I mean, we will look at why claims were declined and the cause of claims not being declined. The biggest area within that, and kind of 18% of those that weren't paid out were actually due to excess alcohol consumption. Okay. So not telling the truth about how much they actually drink. So saying they drink, I say, a glass of wine a week, whether it's a bottle of wine a day or whatever they're drinking. So that's kind of important from that point of view. But I guess also it's understanding a little bit around about that from the point of view of sometimes customers' motivation for taking cover as well, because actually 7% of claims that we didn't pay that were misrepresentation, the client actually had cancer when they applied. So there's been a trigger for them. They've went, oh God, I've been diagnosed with cancer. I better get some cover in place. Not understanding actually that's too late. And suppose, I guess,
it's past the event, isn't it? Yeah.
Yeah, and I guess that's the point of view from the advisor's point of view, to help customers understand that don't do this when it's too late. Make sure that you have the cover in place already, and that's part of the conversation they want to be having. Particularly, a lot of the stuff is written on the back of mortgages. Don't think this is something you can put off and do further down the line, because you never know when something is going to happen to you. So you want to be protected and make sure that you have your financial objectives. You know what I mean? It's great talking about that. We do a mortgage. Their end goal will be to have their mortgage paid off and have a mortgage-free property that they live in, which is great if you can continue to pay your mortgage payments. But if we look at it, if something does happen, and we never know what's around the corner, if something does happen, to give them the ability to continue to pay that or even pay their mortgage off. So it's thinking about these sort of things. We do find from misrepresentation, actually, the vast majority of it, like nearly 79% of misrepresentation was actually deliberate misrepresentation. So the customer's known that they should have probably told the provider about this, but they wanted to cover in place and didn't tell the truth. So it's kind of one of those bits that we talk about. But there's a few different types of misrepresentation.
Okay. I think, and this is my takeaway from that, and I'm sure a lot of people's will be here. I mean, there's a lot of things internally within your firm's processes when doing things like the application with the client, but that could actually be a separate topic of conversation. I think really, and this is my takeaway, Stuart, would be it starts from the beginning, really, from the advisor. So really, the myths around protection not paying out, from my point of view, advising a client, well, actually, that does start with myself. So ensuring that the client understands what protection is, what the protection does, how it's going to help them and their family, but more importantly, why they should be taking it. Ensuring that they understand that if they do drink 10 pints a week, they shouldn't be telling us it's 2. The point of having this insurance and paying 30 or 50 pounds a month for it is to make sure, not for the sake of having it, but if you do need to make a claim, it is going to get paid out. So it's being totally open and honest, which, we should be delivering that in our terms of business from the outset. I think really the third question that I had for you was around what types of misrepresentation there are. I think you've thoroughly really gone through that in the last point, but are there any other misrepresentations that you feel you'd like to address at this point?
Yeah, well, I guess it's understanding what types or what the classifications and categories of misrepresentation are from a provider, and that's done by the ABI and kind of what we want to do. But there's realistically 3 different classifications. There's innocent, there's careless, and there's deliberate or reckless. And I'll give a bit of an explanation around about those 3 different areas and what that means, and actually what the outcome would be if that was the different category that was claimed under. So innocent is realistically the customers acted kind of honestly, and they've been reasonable in all circumstances. So they've tried to tell the truth as much as possible. And I guess the bit around about misrepresentation is what you have to understand from a provider's point of view and the ABI stance is that it's about what a reasonable person would think. So not one end of the scale, other end of the scale. It's what a reasonable person would have considered. So within innocent misrepresentation, a reasonable person would have considered that the information was not relevant to the insurer when they're going through it. So talking about from that point of view, I had a quote 6 weeks ago. we don't need to know about that, you know, and it's these sort of things. So if it's innocent misrep, then actually we pay the claim in full. Because if it's something that no reasonable person would have thought that you had to tell a life insurer, then actually we're not going to bother about that. So that's fine. Wouldn't have materially affected what our decision would have been when we were giving them cover in the first place. I guess what leads into that then is kind of careless misrepresentation. And that's where I guess we'll look to apply, I guess it's resulted from insufficient care. So the customer hasn't thought about it enough or exercised kind of reasonable care is what we would say. So, and that would include anything from an understandable oversight or an inadvertent mistake to actually serious negligence as well. But I guess that's the bit, again, it's about thinking about what a reasonable person would have considered, that the information that they're not telling us would have been actually and was relevant to the insurer for them to make their decision when they're doing that. And in that situation, we'd apply a proportionate remedy. So that might be that we don't pay the full claim, but we pay a part claim based on kind of either premiums coming off or whatever. And it's around about that. They're still going to get a claim paid out, but actually it might not be the full amount just because they didn't tell us. And so we'll look at that. How would that have affected our decision when we first put that cover in place? The last area of misrepresentation, and probably the most serious one, is deliberate or reckless. And that is where, on the balance of probabilities, actually the customer knew or they should have known that the information given was both incorrect and would have been relevant to the insurer. And that's where we touched on there around about actually having a cancer diagnosis before you take cover. Now, they would have known, a reasonable person would have known that if you're taking life insurance, telling the provider that you've got cancer would have been important. So that's where we're looking at. The customers acted without any care as to whether it was correct or relevant to the insurer. Okay. I guess the big bit from understanding that, though, when it comes to that, when we're talking about paying claims, so when the policy may be made invalid, so we'll decline a claim and cancel the policy from inception, but that would only be actually where the thing that they've told us about would impact the premium by more than 50%. So there would have been a more than 50% rating applied. So if it's something that they've told us that actually we would have rated the plan by 25%, we're still going to cover that. It'll be a proportionate remedy that's paid, you know what I mean? Because we'll reflect that they should have had a loading on that, but they still will receive a claim. So even with deliberate or reckless, we're looking to do the right thing for a customer. We're not saying you didn't tick that box to tell us you had a cold 6 weeks ago or whatever. Even as something that they should have probably told us about, unless it's kind of materially going to have a largely large, you know, I mean, more than 50% on the premium, we're still going to look to pay that claim out. So it's getting that across to customers that it is about, telling the truth as much as possible. But even if they don't, if they omit something carelessly or don't tell us something, we'll still look to try and pay that claim out.
Which again, it is interesting, Stuart. I think, and my next question specifically actually was: do insurers, AIG, any other insurer, look to do the right thing? And you actually specifically said that phrase a couple of times in the last question. So it's really interesting from us to hear, really my takeaway again is you are actively looking to pay out claims, whether that be a part payment or at a loading, or going back to, what would the quote have been if that was input at the sort of sourcing stage. So, that is really interesting. It's refreshing to hear that insurers are looking to do the right thing. And I think the more advisors that sort of listen to this podcast and have the ability to be able to talk to specialists like yourself, whenever you're talking to a client, I think being confident in your approach and what you're talking about is the key to the client understanding everything and understanding that, you as an insurer are looking to do the right thing. Personally, it would give me great confidence when talking to a client. So that was really the last question, actually, Stuart. But is there anything else you'd like to add around doing the right thing from AIG's point of view?
Yeah, I guess it's just understanding, I suppose, from that point of view. Example, Sam, of what providers would look to do in different circumstances. You know, I mean, we've got different, I guess, examples from that perspective in AIG where we've done things where actually, there's an example, customer claim that went through Susie, a client age. She was 42, diagnosed with breast cancer, claiming on a critical illness plan 4 years into the cover. Actually, when we were doing that and going through, and the initial underwriting decision was kind of standard rates because it was a clean application. But when we got the GP report at claim stage, it turned out that her mother had breast cancer, which we would have expected to have been told on the application form. So when we're looking about doing the right thing, the retrospective underwriting decision would have been on that. Actually, we would exclude breast cancer due to family history. She wouldn't have had cover for breast cancer. But what happened in the situation was actually, with that claim, it was paid out in full, because again, it's about doing the right thing and understanding what it was. The applicant's mother had breast cancer when the applicant was really, really young, and she didn't know. Her mother had never told her, brought it up. She was not aware. So it wasn't a deliberate, reckless misrepresentation. Actually, she just didn't know. So when she did the application, she was like, yeah, no, we don't have a family history of breast cancer. But only as a result of that did she find out that her mum had actually had it. So in that scenario, we paid out the claim in full because she didn't know about it. It was only when we got the GP report and they went through that and discussed it.
Which is really, see, that is really, really interesting to hear, and actually refreshingly great to hear as well, because I think, you know, how many times do we as advisors talk to our clients and go through the medical questionnaire, and, you know, the applicant's mother might have had breast cancer when the applicant was 7 years old, you know, and how can you expect her to reasonably remember that? It might not be something that's been discussed around the family dinner table so much as she's been growing up. But hearing that you've done the right thing there and made that payout, I think having stories like that really gives us good context to clients when we're talking to them, to reassure them. So, you know, thanks for sharing that with us, Stuart. That's really, really positive to hear.
Perfect.
I think I'll just do a quick roundup now on the end of this podcast. I mean, again, thanks for joining us. It's great to have a specialist from AIG on board and talk to us all here. So hopefully for those that have listened, there's some really great takeaways. We can have more confidence in our approach when we're talking to clients and really let them know that the cover is always valuable, but having the reassurance that the providers are doing the right thing and are actively looking to pay out is really reassuring as well. So yeah, keep your eyes peeled for many more upcoming podcasts around the protection area. We're going to have some great providers joining us as well. But on today's one, I just want to say again, thanks, Stuart from AIG. It was a pleasure to have you with us, and we'll catch up with you soon.